All right, everyone, here we are with ticker symbol PLTR. And before we jump into this chart, I want to say welcome to all the first-time viewers and investors. Welcome to the channel, Invest for Tomorrow. To all the subscribers, welcome back, and let's jump into this chart. So as we see here, PLTR has been with a slight upward trend. It kind of got close to the 50-day moving average, and it broke right down below it again. But they're pushing through. They're pretty close there. And the 50-day moving average is currently at 27.34. I want every single investor to be aware of that and write that down. As long as we're below it, we're in bearish territory. The moment we're above it, we're in bullish territory. We're currently sitting at 26.95, and the 50-day moving average is coming closer to the price, giving a chance for the bulls to break through it. So we're going to look at some resistance levels. We're going to look at where the 50-day moving average actually sits, and our new support. So this is going to be a little bit more narrow than yesterday's chart based off of how the chart reacted today. This is the highest point before it started to fall, and we're going to look at one of the lowest points reached in these last couple hours of the day. We're going to talk about it a little bit narrow, and then we're going to talk about it a little bit broader. So first I want to talk about it broader. So this lowest point here is super important right now, 25.09, give or take 25.10. If you want to write that down, super important point. That's the lowest point in this bearish run. If that gets broken through, this could be on its way down to newer lows, newer support levels, and moving deeper into bearish territory away from the 50-day moving average in a downward direction. Now the highest point before the fall is still important, and that's 29.15. I want every single investor to write that down. Super important to keep it in mind and have on your radar, right? You want to watch for that. 29.15 is a very important number on the upward trend. Once that gets broken through, this could be on its way up to newer highs, new resistance levels, and then obviously up here is the next point at 30.88. But before getting there, 29.15 is important, and the resistance level that we're about to talk about is just as important for tomorrow. So 50-day moving average is in the middle of all of this, but is above the current price. So what is our support? Our support here for tomorrow is 26.76. If that gets broken through, you have that window between the lowest point down here at 25.10, 25.09, like I stated earlier, give or take, as a very important point of reference between how it's reacting from 26.76 to this support level down here. And are the bears tearing it down fairly quickly in that direction, or are the bulls trying to reappear as it's working its way down further away from the 50-day moving average to stop it from going any lower or bringing this one back up? But before working on any of the numbers down here, the most important number to look at and pay very close attention to is 26.76. How quickly does it break through it, and how quickly is it pulling away from it, or are the bulls trying to reappear fairly close to that point of reference before it goes any deeper? Now, the most important thing here for the bulls is breaking through the 50-day moving average. They want to stay above this support, obviously, to not go any deeper, and they want to get back into bullish territory. So they really want to break through this 27.34 point. It's very important. But once they do that, they need to pull away from it to gain leverage and dominate the chart again, which is now breaking through resistance. And the resistance is 27.86. The bulls need to break through 27.86 and turn that into a support to pull further away from the 50-day moving average in an upward direction and build momentum off of that resistance, which is the first resistance in bullish territory, to get deeper into bullish territory, hit newer highs and new resistance levels. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. and these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.